Hello dear traders, I'm Anna Kasatkina and you're watching the weekly review of financial markets on Insta TV. Last Friday, April 14, the US stock indices were falling as the season of corporate reports started and investors were keeping an eye on geopolitical situation in the world. The Nasdaq Composite dropped by 31.01 and closed at the session low of 5,805.15. Over the week, the Nasdaq lost 1.2%. The Dow Jones Industrial Average decreased by 138.61 to the session low of 20,453.25. The shares of Chevron and Caterpillar were the worst performers among the Dow components. Throughout the week, the index fell by 1%. The Standard & Poor's 500 edged down by 15.98 to the session low of 2,328.95. The weekly decline of the index was 1.1%. Donald Trump's statement on Wednesday that the US dollar is overvalued triggered a decline in the stock indices on Thursday. The major event of the day was the start of corporate reports. As for macroeconomic data, the University of Michigan reported on the U.S. consumer confidence. In April, the indicator rose to 98 from 96.9. Improved current conditions amid stable situation on the labor market and reasonable consumer inflation contributed the most to the indicator increase. The first companies that provided their reports for the first quarter of 2017 were the U.S. banks, such as JP Chase, Wells Fargo and Citigroup. The revenue of JP Chase & Company jumped by 6.2% in comparison with the previous year to $25.6 billion. The net income expanded by 17% to $6.45 billion. One of the growth boosts of the financial sector companies was higher earnings from fixed income securities operations and increased demand for investment services from corporate clients. Citigroup Incorporated managed to increase its annual revenue by 3% to $18.2 billion. Besides, its net income rose to $4.09 billion in the given period from $3.5 billion in the first quarter of 2016. However, the financial results of Wells Fargo & Company hardly changed in annual terms. Its revenue totaled $22 billion and its net income made up $5.46 billion. And this concludes the weekly review of financial markets. See you next week.